This is Chapter 5, Learning Objective 2. Taxable wages for FUTA and SUTA. The FUTA, I never know how to say that, FUTA or FUTA, so I'll just do whatever comes out. The cap's at 7,000, so that means once employees have earned over 7,000, you no longer have to pay FUTA on them. And the state wage base caps at a different amount in each state. As of 2012, Utah's cap was 29,500. Wages include bonuses, advances, severance pay, stock compensation, like the fair market value. Companies sometimes, instead of paying cash, they give stock. Whatever the fair market value of that is considered wages. Tips, retroactive wage increases. Somebody gets paid for back pay, that's considered wages. And there's a complete list in your book of what's considered wages. So all of these get added up to meet that $7,000 for FUTA. So there are some wages that are specifically exempt. Advances or reimbursement of business expenses. So again, an advance is you're getting your pay in advance, and so when the payday actually comes, you don't get it because you already got it. So you'll be taxed on the regular pay, not the advance. Reimbursement of business expenses, that's not considered income. You spent the money, you just get reimbursed, you're kind of back to where you started, so that's not considered wages. Retirement pay are not considered wages. So FUTA never gets taken out on that, because when you take out your retirement, you don't have to, your employer's not paying on anything at that point. Educational assistance payments. If your employer pays for you to go to school, or maybe we should do this from the employer's point of view. If the employer is paying for employees to go to school, that's not considered wages. It's just going to be an additional expense to the employer. Any meals and lodging, if it's for the employer's benefit. So when Google gives all of their employees free meals, that's not considered wages. And these rules are similar to the same ones as for the Social Security. Strike benefits, workers go on strike and they get paid benefits. A lot of times that comes from the union, actually. It generally doesn't come from the employer. It comes from the union. That's not considered wages. And there's a complete list in your textbook. So what's the rate? The FUTA rate is 6% of the first 7,000 of gross wages for each employee per year. So remember when we were looking at Social Security, the wage, the cap was 110,100 for 2012. This is the same theory, except the cap is much lower. It's 7,000. So after 7,000, the employer no longer has to pay FUTA. Now, employers get a 5.4% credit against FUTA, which is allowed for the state unemployment tax. So if the total FUTA is 6%, but they get a state FUTA of 5.4, then the net FUTA is 0.6. So that's really what employers are paying. They're paying 0.6% of 7,000. Okay, this is 6%, this is 0.6. So even if the experience rating allows the employer to pay a lower rate than 5.4%, they still get the full amount of the credit. So what are we talking about when we talk about the experience rating? What happens is employers pay into this state fund. I'll give you an example. My father had a roofing company. He was a roofing contractor, and he did big commercial roofs. And his workmen had lots of work in the summer, and then a little bit less in the winter because there were some days when there wasn't much, the weather wouldn't provide, it was hard to go to work. So he sometimes had to let go some of his employees, okay? So when they were let go, they would apply for and receive unemployment compensation. Well, every employee that took unemployment compensation is recorded by the state, and so my dad's rate for state unemployment would be higher than maybe an accounting firm that didn't have anybody ever or rarely losing their job and having to collect unemployment. So certain industries traditionally pay higher rates, like construction, because they have a lot of people that end up having to draw unemployment. And other industries, like actuaries and attorneys and some of the professional ones, have less people drawing unemployment. It could be that you're an accounting firm and you hardly ever have anybody taking unemployment. Your rate might be way less than 5.4%, but they're still going to give you this 5.4% credit against the FUTA tax. Okay, so there are some credits against the FUTA tax to get the full 5.4% SUTA credit, the employer must have done the following: made SUTA contributions on a timely basis on or before the due date for filing. Also, the employer has to have been located in a state that's not in default on their Title VII advances. Now, this is sort of out of the hands of the employer because it's the state that may or may not be in default. And what this Title VII is it lends funds to states so that they may provide unemployment compensation funds from the federal government. So what that means is the states go through times when they're paying out a lot more unemployment compensation than they have coming in, and so they borrow that money from the government and then they have to pay it back. And if they don't, then they're in default and the credit is reduced 0.3% per year beginning the second year after the advance. So, for example, Michigan is subject to additional rates if the loans aren't repaid by November 10th, 2012, because Michigan has a lot of people in the car industry, and they had a ton of people that get laid off with this latest economic downturn starting in 2008. So lots of people were taking unemployment. Michigan didn't have enough in their state funds, so they borrowed money from the federal government, and if they don't pay it back, then this credit of 5.4% is going to be reduced by 0.3 every year, 0.3%. So even if the employer pays into more than one fund, like you're paying into different states, the credit you can get for the SUTA credit is 5.4%.